So hello everyone. Let us start with our topic of the day. We will start with reserves, owners equity, drawings and shareholders equity. Now let us understand the meaning of reserves. So reserves means suppose this Mobile Web Limited is a company which has earned a profit of say 1 lakh this year. It kept aside 10% of the profit out of this 1 lakh, that is 10,000 rupees. So it is kept as a reserve. So this is called reserve of the business, general reserve of the business. So reserves are created out of the profits. Okay. Yes, every company should maintain every year so that the company can have strong financial position in its business. Now, let us understand, suppose you have profits earned this year, this much, suppose you're talking of 2000 year, 2000, suppose you started your business 2020, okay? Now, in this year, suppose you have some net income, net profits available to you. So out of this net profits, every year you're maintaining the reserves, okay? Now, out of those reserves, you have two things available. You can either retain those earnings, okay, in the business and reinvest them for future growth of the business, or either you can pay it as dividends to shareholders, because you can also use it for emergency or certain certain contingencies which will arise in a business. Okay, so basically the two purposes the reserves are used, either for a specific use and for a general use. So this is a very retained earnings means you're not you are actually reinvesting your money back into the business. Okay, you're not using it for distribution as dividends or for certain meeting certain emergencies. Okay, you are using it here for reinvestment purposes or growth of the business. You are retaining them in the business. Okay, but here you are distributing them as dividends or using it for contingency or emergency purposes. So there are certain uses of reserves. We'll understand about it. It is a part of the profit set aside for the purpose of strengthening the financial position. I think this much is clear. Okay. Now here when you're maintaining the reserves every year, suppose you started your business in 2019, 1920. Okay. Now every year maintaining the reserve. A certain part of the profits is kept as a reserve every year. That means this is very important in a business because it will help in strengthening the financial position of the business, and it can help actually your meet your future contingency or any emergency which can arrive in a business. And most important is reserve is an appropriation of profits. Appropriation means setting aside certain part of money for specific use. Okay, and this much is clear, I think, now reserves. Okay, now let us understand the reserves get actually these reserves get accumulated over a period of time. Okay, because every year you are keeping certain part of the profit as reserve. Okay, so it gets accumulated over a period of time. Now These reserves can be used to meet the long-term and short-term projects, which I told you. Either you can keep the reserves for reinvestment purposes and you can retain them in the business for future growth, or either you can actually use it for your certain, like you can buy fixed assets, you can pay bonuses, you can pay an expected level settlement, you can pay for repairs and maintenance and pay off the debts which are on the company. So they actually are strengthening the financial position or liquidity position or the financial stability to the business, and making sure that you do not feel insolvent, the company does not feel insolvent or does not fall into bankruptcy. Okay. Now, the most important thing is they help to maintain the fund the long-term and short-term projects. So the company wants to make a new investment proposal or want to invest in a certain investments which actually can grow your company in future. So that for that purposes you can use the reserve. Okay. Now let us understand the meaning of retained earnings. Now, very important concept, because retained earnings come out of reserves only. Okay, retained earnings are arising from reserves only. Okay, so what is the meaning of reserve? Suppose this retained earnings means suppose you have your net profit total available to you. Okay, now out of that net profit which you are keeping it as a reserve, if you subtract the dividends which you are paying to your shareholders, the leftover is your retained earnings. Okay, let us understand this concept in a much better way. Now, retained earnings are the firm's cumulative net earnings. I told you, suppose you started your business in 1923, and now suppose you started your business in 1923. Okay, now every year you're keeping certain part of the profit, okay, as a reserve. That means uh, if you accumulate those earnings or net profits, you're keeping it as a reserve. So this accumulated net profits or earnings after accounting for dividends, means after paying for the dividends to shareholders, whatever is left, that is your retained earnings. So it is actually called as the earning surplus. Okay, that means till 1923 you started your business और आपने 2022 तक उस बिजनेस को अगर आपने चलाया है, तो दैट मीन्स 2022, ओके, दैट मीन्स इट मीन्स दैट इतने साल तक आपने रिजर्व्स निकाले हैं. सो ये सारे एक्यूमुलेटेड प्रॉफिट्स जो आपके हैं, सॉरी क्यूमुलेटिव जो नेट अर्निंग्स आपके अवेलेबल हैं, उसको हम रिटेन अर्निंग्स बोलते हैं. लेकिन इसमें से जो भी आपने प्रॉफिट सारे जो आपके टोटल प्रॉफिट्स हैं उसमें से आप माइनस कर दीजिए आपके डिविडेंड्स जो आपने शेयर होल्डर्स को दिए हैं. सो बाकी जो बचेगा वो आपका रिटेन अर्निंग्स होगा. ठीक है. Now it means all the measure of all the profits that a business has earned since its inception. Inception means since the starting of the business. Okay. Now it is a term used to describe the historical profits of the business. Okay, that have not been paid out in dividends, and it is represented in the equity section of the balance sheet. We'll discuss it in the later videos. Okay, what is the meaning of equity section? Because in balance sheet is a financial statement which shows the two sides, that is assets and liability, and liabilities contain the equity section only. Okay, so we'll discuss about it. Now the most important thing is retained earnings is the portion of the company's profit that is held or retained from the net income at the end of a reporting period and saved for future use as shareholders equity. Now it means that whatever profit is left after, see, net income minus net losses, that means whatever profit is left to you, okay, subtract the dividend to shareholders paid, whatever is left is your retained earnings. Okay, now a simple concept is retained earnings are a portion of company's profit that is held or retained from net income, because whatever earnings you have, you are getting from the net income only. That is the net profits. Okay, and at the end of account reporting period and save for future use as shareholders equity. This shareholders equity we'll discuss in the coming videos. Okay, till then just understand the meaning of retained earnings as the cumulative net earnings which are or the accumulated net earnings, okay, after the payment to shareholders. Now let us understand the meaning of retained earnings and reserves. Now retained earnings represent the cumulative earnings of the firm since the starting operations. Agreed? That means it can be your, suppose the companies have suppose every year the company is making a profit of, every year I'm talking about, the company is making a net profit of say suppose say 10 lakhs. Okay, this is a net profit every year the company is making. Okay, that means in for 10 years the company has continued its business. For the 10 years, that means 10 lakh into 10 will be your retained earnings. Sorry, 10 lakh into 10 will be your retained earnings. Okay, so okay, minus the dividends. Okay, now say dividends paid is 20 lakhs total. Okay, so then 10 lakhs minus 10 lakh into 10 is 100 lakhs. 100 lakh minus 20 lakhs, that will be 80 lakhs will be your retained earnings. Okay, now they are a component of profits. Reserves are a component of profits, but they set aside for specific purpose. That is, every you are maintaining the reserve out of your net profits. Okay, this is separate. Okay, this is cumulative, and this is every year you are taking out that profit out of the income. Okay, now let us understand the difference. Retained earnings is a part of profits remained after paying the dividends, which I already discussed with you. It is a part of profit that firm set aside for specific purposes. It can be any purpose, okay, which we discussed in the previous slides. Then actually retained earnings means you are actually reinvesting your profits back into the business. I told you that you can either invest it or retain it in your business for future development purposes of the business, okay, or future growth of the business. And here reserves, you mean the unexpected expenses or emergencies which can arrive in a business, or any contingencies can arise in a business. Okay, then profit for the year is added after deducting the dividend. Okay, here certain percentage of profit is transferred to the reserves account, because if you remember initial slide may when the profit was 1 lakh, I just told you that just multiply it by 10% of the reserve. That means that 10,000 is a reserve which is created out of the profits. That means your certain percentage of the profit is transferred to the reserves account. And here may retained earnings may the profit you have minus the dividends. That is your accumulated earnings. Okay. Now, let us understand the meaning of shareholders now. We just now talked about shareholders equity in the previous slide. Let us understand the meaning of shareholders, and then you will understand the meaning of shareholders equity also. Okay. Shareholder is a person or institution or any entity that has invested the money into the corporation, that in a business, in exchange for a share of the business ownership. We understood about the shares. Okay. Now see, this is a very common thing that any person who's holding any share of the company, suppose the company is ABC, and if you're holding even a one share of this company, if you're holding even a one share of this company ABC, then you become the shareholder of this company. Then you have the voting rights, then you have the decision power rights. Okay, so it is a person or a company or institution that own the shares in a company stock. That means whatever the company shares, if you own even a single share of the company stock, company's capital, then you are still a shareholder of the company. And when we talk of shareholders, generally we mean equity shareholders, because equity shareholders are the owners of the company. Okay, shareholders are subject to capital gains and losses. Capital gains and losses means if the business is incurring losses, shareholders will be paid, okay, will be paid less amount of returns. Okay, less amount of returns. But if the company is profitable, position is good, or the company financial position is good, it is earning very much good profits, then shareholders will gaining that much profit on the share also. Okay, for every share they will get a price. Okay, every share they will get a price. If there is a hike in the profits, there will be hike in the share price value. Okay, now if you can see over here, this suppose this is a company and they're the shareholders. This much, suppose these individuals hold 16% of the shares in the company. Financial institutions hold 32.9% shares. Non-Japanese companies hold 39.9% shares. Securities companies hold this much shares in the company, and other companies hold 9.4% of the shares in the company. Okay, so that means shareholders can be institutions also, entities also. Now, if you can see over here, we will come to know that this is a business, and the business is earning a net profits, and out of the net profits you are distributing, using the net profits in either two ways. Either you are using it for retaining them as retained profits in the business, which is called retained earnings. Okay, and secondly you are distributing the dividends out of those net profits to shareholders. Okay, that means net profit over here are showing you two uses. Either you are retaining them in the business for further investment or growth purposes, and secondly you are paying as dividend to shareholders. And the most important thing is, when you have retained profits, you actually reinvest it back into the business for future growth. Okay, Now, dividend means the company's board of directors and management distribute a slice of profits as dividend. That means if the company is earning good profits, they distribute a part of the profit as dividend to shareholders. Okay, so that means these dividends are paid out of your reserves. Okay, companies make the profit, and certain part of the profit is distributed as dividend to these shareholders or the owners or the equity shareholders. Dividend means a dividend payment is a distribution of company's profits to shareholders. Suppose if you own 1,000 shares of company A and each share value is rupees 10, you have invested, that means one 10,000 capital. That means you have bought 1,000 shares of that company ABC and you have invested 10,000 into that company. That means you will get dividend on those shares because share price has a value. Every share has a value. So dividend per share suppose is rupees 3. Number of shares the shareholder is holding is 1,000 rupees. Total invested amount will be 10,000 rupees. So out of these 1,000 shares, dividend is rupees 3. Every year you will get a dividend, okay, fixed percentage. So total dividends paid will be 1,000 into 3. 10,000 you invested amount into the business for that year, and that is 1,000 into 3 will be your dividends paid to that shareholders. So 3,000. Okay. So